name is Mark Banicevich, and in the interest of full disclosure, so that we can be aware of and manage our conflicts of interest, I work for Partners Life as Head of Industry Engagement, but today I am the moderator, impartially, completely, of this debate. We've been hoping to have a debate at the FSC Conference for quite some time, and so it's really exciting that we can pull this off this year. Very lucky to introduce in a moment who our debatees are, but just by way of a quick introduction, the recent FSC research that we released a couple of months ago on life and health insurance showed that about a third of New Zealanders have life insurance, about a third of New Zealanders have health insurance, a little over a tenth have income protection insurance, and a little over a tenth have trauma insurance, about 15%. We've asked questions about what holds people back from getting insurance, what are the roadblocks, what causes them to cancel insurance policies. What we haven't really discussed is insurance important at all? So the purpose of this debate is to ask that question. And in fact, more specifically, we are challenging the statement that life insurance or insurance is, I can't actually remember the exact words now, is not an essential product. It's an unnecessary burden and not an essential safeguard for New Zealand families. So that's the statement to be debated. We have an affirmative team, very ably led by our Retirement Commissioner, Jane Wrightson, from, I can never remember, Ahunga Ora, the Retirement Commission. Beside Jane, we've got Matt Noyce, who is the founder and an actuary at MNC Actuaries from Australia. We've got, of course, on the end, John Duffy, who is the CEO of Consumer New Zealand. So please give a warm hand to our affirmative team. And the team who are going to try to convince us in the negative that life insurance isn't a complete waste of money. We're led over here by Simon Tohill, who is the General Manager of Strategy and Marketing at Chubb New Zealand. Besides Simon, we've got David Tikao, who is Investment Manager Endowments at Ngāi Tahu Holdings, and Bronwyn Kirwan, who is Chief Commercial Officer at Fidelity Insurance, or Fidelity Life, my apologies. Please give a big round of applause to our negative team. I have a very easy job today. My job is to do this. I'll be watching the time fairly closely. Each speaker will have 5 minutes and no more because we have to clear out of the room in time for the next session. So I'll be watching the time. At 4 minutes 30, I'll give them a little warning. And then at 5 minutes, I'll be very enthusiastic and yell at them to get off the stage. The way the proceedings will work, we have the affirmative team who will lead with Jane, and then the leader of the negative team will follow them by the second speaker affirmative, second speaker negative, third speaker affirmative, third speaker negative. And just to confuse things, we flip it at the end. So Simon gets to come up and say his final words before Jane has the final say. Are we all ready? Yeah. At the end of this, we're going to vote as to who wins this debate. So you must watch carefully, take copious notes, and may the best team win. Jane, you're up.
Well chaired. Life insurance is just an expensive burden, not an essential safeguard for the future. That's the moot. It's a leading question for this particular audience. We're presented with an uphill battle to persuade you that the life insurers in the audience are either misguided at best or just very, very naughty at worst. We have instructions to make this a kind debate, not a roast. I found that a bit sad, but never mind. It makes it even harder because we're talking about a product that you deeply value, but serves no useful purpose. So our job in the affirmative team is to show you now have a serious challenge to rethink your values and beliefs. You're very smart people with open minds, and we know we can persuade you in an hour. The affirmative may be up against it today, but we are the truth tellers and provocateurs on the stage, not the PR spin artist sitting to my left. The primary issue is that life insurance is death insurance, no more, no less. When you sell it to younger people, the chances they die are infinitesimal. When you sell it to older people, the cost material outweighs the benefits. The problem with life insurance is that it has a terrible reputation and low level of trust. Nothing says trust like signing a contract that only pays out when you're no longer around to read the fine print. I still have an old policy that's deeply unsuitable that should never have been sold to me as a young woman. The premiums aren't much because I've resisted pleas to increase them, but the provider comms are pretty bad, generic emails, an advisor who I've never met, if you're in the audience, hello, who occasionally wants meetings with me that I'm sure are only about upselling, lack of information about what to do with an elderly policy. Cancel it, right? I've had the policy so long that I've now realised it's a salesman's retirement policy, not mine. But hell, the search engine marketing for life insurance is good. I googled bad news life insurance stories and got only good news ones. In the cesspit that's online, that is pretty impressive. And I couldn't even find good jokes online. I tried Google, I tried AI, I tried everything. What do hospital gowns and insurance policies have in common? You're never really covered as much as you think. That's as good as it gets. So the absence of good jokes and bad online news speaks volumes to me about the irrelevancy of this product. My colleague Matt, a Seven speaker and from the industry itself, will lift the lid on the hidden horrors of this dinosaur product. Our third speaker, John, the consumer champion, will cheerfully demolish what will clearly be self-serving arguments from the affirmative, who would lull you into a warm bath of smugness that is completely undeserved. So, life insurance, what other product pays 250% commission up front or more? How does this remuneration structure even come close to fair conduct? What other product incentivises upselling and overselling with this gobsmacking reward structure? What other product is sold for the benefit of advisors, not the clients? What other product actively encourages churn and in a way that clients might end up with cheaper premiums but less cover than the churned policy? And unwittingly, because the damn paperwork's so hard to understand, life insurance is a burden. It's overpriced. You can DIY with a better result. Its corollaries like funeral insurance are frankly a rip-off, and its payout rates are low when you need it. Worst, it's old-fashioned. And the need for new product development has never been stronger. Don't listen to the next team. They're playing to your biases, your groupthink, the industry's unwillingness to tackle some inconvenient truths. And I know we've got a highly intelligent audience here, and that you're thinking deeply about how to navigate the turbulent years ahead. We need innovation. We need individualised advice frameworks. We need products that are designed for the customer, not the salesperson. The current state of life insurance, a fusty old product first used in 1583 for God's sake, just can't cut it in the 21st century. I want you to innovate and really build a loved product that's a true safeguard, not a limping financial drain. Until you do that, I have to sadly conclude that you have nothing but an expensive burden to offer. But thank you for listening with an open mind. Ngā mihi.
Set the bar for me. So look, let's picture this. A young family suddenly loses its main source of income due to an illness, a disability, or even death. Now that statement alone will need clarification after Jane. But beyond the emotional toll, the financial impact can be devastating. Bills don't stop coming, mortgages still need paying, children still need food on the table. That's exactly what life insurance exists to protect us from. So today, we will demonstrate that life insurance is not an expensive burden, it is an essential safeguard for all of us. Now, as Jane was talking, it became clear to me that we need to define a few things here. So she's immediately tried to narrow the definition of life insurance. So let's be clear, life insurance is not just a payout after death, and you guys all know that. Life insurance includes income protection and critical illness cover. It protects families not just after death, but during life-changing events. It protects your lifestyle. Secondly, and most importantly, what is a burden? So we've heard a whole lot of things. It's difficult to read. Let's talk about what a burden is. A burden is something that causes hardship, cost, or stress without sufficient benefit. So please keep that in mind today. 2 bits here: hardship, cost or stress, sufficient benefits. We have to balance those when we talk about burden. And essential means absolutely necessary, something critical to protecting security and well-being. So I urge you to take into account all 3 of those definitions and not let my esteemed colleagues try and narrow the discussion down to very thin examples. So let's look at the real question here. Does the cost outweigh the benefits? Is it wasteful? Is it necessary? We are going to hear arguments today that it's burdensome to buy life insurance, but we're not here to talk about that. We're here to look at the value it provides and why it's an essential safeguard. And let me tell you why. Life insurance ensures our dependents are not left with debt or poverty. It provides financial support during life. It pays mortgages, it covers bills, it gives you stability. Without this safety net, many households would collapse financially at a single event. Secondly, and more importantly, life insurance is not a luxury. It's a part of responsible money management. It's a key piece of developing the financial literacy of New Zealanders. For our younger generations in particular, getting cover early encourages long-term financial planning. It teaches the value of preparing for the unexpected. Dismissing insurance as a burden often stems from a misunderstanding of its role in society. In truth, it's an affordable, practical investment and an essential part of our financial literacy journey. And thirdly, something you'll all be familiar with, life insurance offers something priceless: peace of mind. Families know that even in the worst case scenario, they won't be unprotected. And that psychological security reduces anxiety, and it allows you to live life with confidence, not fear. Now, my teammates will expand on this. David will talk about the inequities in the healthcare system and how they impact Māori. He will provide a wide-ranging view on the benefits of life insurance and why this is an absolute necessity. Bronwyn will directly rebut the opposition's claims. She will tell us why life insurance is a community good and demonstrate how it is both an essential and stabilising force for households and macroeconomic resilience. Together, we will prove to you life insurance is not a burden, it is essential. So look, in conclusion, I would say life insurance is far from a burden. It's a safety net, it's a lifeline, it's an essential safeguard for our financial futures. We cannot predict life's uncertainties, but we can prepare for them. And that's why life insurance is essential. Thank you.
Well, thank you, Simon. Now, my learned colleague from the negative team just painted a picture of life insurance as this essential necessity. But let's bring us back to reality and start with a fundamental question. Who actually needs life insurance? The industry sells it as a necessity, like smoke alarms, but let's face it, the poorest amongst us in society are protected thankfully, by a safety net. And the wealthiest, of course, well, they self-insure. So isn't it just the middle classes that we're talking about who are wealthy enough to afford this? That's a discretionary purchase, right? That's not essential. And what exactly are people buying? Customers pay thousands in premiums. What do you get? You get a promise, you get a PDF that you don't necessarily understand, and if you're lucky, you get to talk to a customer chatbot that doesn't understand the word claim. Here's a radical thought. Why not self-insure? Take those premiums, invest them, no shareholders' returns to fund. Surely a mutual model would be better than what we have today. And what about the commissions? We've got to talk about the commissions. It's a huge elephant in the room. So, as Jane alluded to, some of the highest commissions in the developed world, well over 200% of initial premium. And that's really, really hard for anybody outside the New Zealand life insurance market to understand. If we compare with, say, Canada, it's between 30 to 105% of initial commission. The US is only sort of 40 to 90%, and Australia, of course, these days caps it at 60%. So it's an extraordinary difference, and Very, very hard to defend, of course. But here's where it gets worse. Our renewal commissions are so low compared to many other countries, say 5 to 7%. But in Australia, typically it's 20%. So what does that tell us? We've maybe created a system, and I'm part of the life insurance industry too, right? We've created a system with massive incentives at the point of sale, which suggests a product that's so deeply flawed and needs these huge inducements to sell, but minimal incentives to ensure customers' cover keeps pace with their changing life and circumstances. Let me share a personal example, and it's not, we're not saying it's just about life insurance. It is about TPD too. I took an own occupation TPD policy in 2010, and courtesy of automatic indexation of the sum insured, it's now $3 million, own occupation TPD, very, very expensive. Did I hear from my advisor once during those 15 years? Nope. Oh, until my credit card expired, and then he was really, really diligent about sorting out the new direct debit for me. So really, so thanks so much for that. That was great. Look, that's not advice, that's collection, so we can do better. Look, it's a fundamental misalignment between products and customer needs. It's that lack of affordable advice and signposting leads people to make suboptimal decisions. Because if someone can sell once and disappear, that's not great for customers. And the trust deficit is real, as we've said before. According to Ipsos, 33% of Gen X and boomers actively distrust the financial services industry. For Gen Z and millennials, it's a bit lower, but it's still 26%. So that's not just skepticism, it's active distrust fueled by bad claims experiences, negative headlines, poor communications, and the inevitable surprises at claims time if a policy doesn't pay out when you thought it would. Meanwhile, customers today expect immediacy and transparency. They live in this world of instant payments and real-time everything. But insurance claims, some of them at least, seem to crawl through complex processes at glacial speed. The industry's approach to education engagement is equally outdated. Modern customers learn through YouTube, TikTok. Think about your kids, where they get information from. They want bite-sized, visual, authentic content. But what does the insurance industry offer? 50-page PDF and an annual statement that nobody reads. So here's my challenge to the negative team. In 2025, we have AI, health coaches, robo-investors, predictive analytics that can forecast everything from your next purchase to your health trajectory. But life insurance hasn't changed since our parents' generation. It's still powered by coal. So the question isn't whether people need protection. Of course they do. The question is whether life insurance in their current expensive, opaque, commission-laden form deserve to be the solution, because based on the evidence, they're not. As necessity, they're an expensive burden that enrich intermediaries more than they protect families. Thank you.
Tēnā koutou, ko Ngāi Tahu me Ngāti Kahungunu taku iwi, ko Erekehu taku hapu, ko Te Poho Tamatea me Otau Heke ngā maunga, ko Akaro me Whakaropo ngā moana, ko Rapaki me Onoku ngā marae, ko Tikao te whānau, ko David Tikao tōku ingoa. Thank you for the history lesson, Jane. None of our team were around in 1583, and I imagine it's quite different now. Now, I know what you're thinking. You have not seen this guy on the television like some of our colleagues on the other side. And you're right. But first, an Englishman, an Irishman and a Māori walk into a bar. You see, it may well become more difficult to utter this phrase in the future, because if you are on top of top New Zealand current affairs, you would have read in one of the country's most reputable journals, the Press, only 3 days ago, and if you skipped past the Ramfilly Shield Special Edition pull-out section, that Māori are 25% more likely to die from cancer than non-Māori, and more than twice as likely to die from cardiovascular disease. A secondary source, Māori are likely to be ill far more frequently, suffer disproportionately high levels of disease, and die younger than non-Māori of the same socio-economic status. You can read that in the Medical Research Institute of New Zealand. If you're brown, like me, this is not good news. In fact, it's terrible news. If these fine institutions are to be believed, there is a greater need to recognise the essential nature of life insurance and how it contributes to a person's financial resilience, which can truly help towards making a truly tragic event even less of a burden. Let me read from another source, the FMA, and in particular the Consumer Confidence Survey 2024, which highlights that only 32% of Māori reported having life insurance compared to 35% for the general New Zealand population. As an industry, we must support closing this gap. Talking to Francis Cook for the spin-off, Retirement Commissioner Jane Wrightson states, even people whose job it is to think about money all day can have money regrets.
Yeah, like buying life insurance.
I tell you this, in response to the ridiculous argument proposed by the opposition that claims life insurance is not essential, I completely agree, Ms. Wrightson. Driving to Christchurch Airport this morning, Christchurch being the home of the Canterbury Crusaders Super Rugby champions, I heard how Gen Z Kiwis are putting their dollars to work. A new survey has found that they are saving and keeping on top of their KiwiSaver contributions. Financial Services Council NZ Chief Executive Kirk Hope spoke to Ingrid Hipkiss. Mr. Hope claims, and I quote, one of the other components of the survey found that they did lack confidence in their financial decision-making, mainly around insurance. Yes, Mr. Hope, I agree that if we are to truly future-proof the role of the industry and the wonderful community that are members of the Financial Services Council, we 100% tautoko your research and how we can help Gen Z and others to better understand financial decision-making, mainly around insurance. Consumer NZ's John Duffy states, consumer issues are also becoming more complex and urgent, including challenges like dark patterns, excessive surcharges, rising insurance premiums, and the desperate need for stronger scam protections. New Zealand consumers deserve better. There's no shortage of work to be done. Our role as an independent non-profit organisation is to ensure New Zealanders can trust the local marketplace and get a fairer deal. Rising insurance premiums, there's a question mark on the end of that. Is it because now, more than ever, more claims are being paid to cover shortfalls and inequities in healthcare and treatment of life-threatening diseases? I want to emphasise that in response to the argument that insurance is not essential, I completely agree. Consumer issues are becoming more complex and urgent, and I urge your team to recognise how insurance is in fact essential. So to wrap up my sources, Te Tauriki, Iwi Māori Partnership, MREINZ, the FMA, the FFC, Kia ora, thank you. Go Crusaders!
Kia ora koutou. Well, that was a very pleasant walk down memory lane. Consumer NZ, ironically, has just released a report that shows house insurance, obviously the comment that I made referred to all insurance, has the single biggest increase of any product monitored by stats. 900% increases in premiums since the year 2000. So stand by that comment that insurance premiums are rising. I'd like to begin. It's hard to know where to begin, to be honest. Probably with an apology. I'm sorry. I'm sorry that the negative team hasn't come prepared with arguments that really support their proposition. I thought we'd have more of a battle on our hands, but this is a bit more like shooting ducks in a barrel. David, in his argument, said nothing to address the stinging allegation that my colleague laid at his feet that the life insurance industry is powering life insurance on fossil fuels. Now, if you're as concerned about the environment as I am, you will be equally worried that this seems to be swept under the carpet. What a greenwash. Where is the emissions reporting? That was really funny if you think about it. It's there. Secondly, David identified the vulnerability of Māori and their overrepresentation in health statistics, and this is a really serious matter. And he also noted that Māori are significantly underrepresented in terms of life insurance uptake. Could it be that Māori are perhaps a little smarter than the general population in the fact that they're not taking up this clearly misleading and worthless product in greater numbers? I'd also like to refute the crack that David had at our leader's age. While she is the senior ginger in the team, she is not 450 years old. Turning to Simon's arguments, well, when we briefly sat around a table earlier and thought about what the negative team might throw at this very learned audience, it was really obvious that they'd open up with a tug on your heartstrings. And of course, it does tug on your heartstrings, the idea of leaving your family without support, without your presence, and being able to achieve some peace of mind by paying thousands and thousands of dollars to an insurance company over your lifetime for a product you're probably going to give up before you have a chance to use it. But that's the tactics that are used. Why would we need such tactics if there was inherent value in the product that we're selling? Why would we need to be paying salespeople commissions of 250%? It's because you need to convince them to leap over their morals, to put their souls in their back pocket and go out and peddle this toxic, worthless product to unsuspecting people who just want to support their families when they're no longer with us. And, you know, I can sleep at night. I sleep piously. But I wonder whether those 250% commissions are helping life insurance salespeople sleep well at night. The panel prior to lunch raised an interesting point that I thought I'd throw into the mix. They noted that scams are on the rise and that people were getting their Gmails hacked, and people were putting scammers were using those hacked credentials to put in false life insurance claims. So now we not only have a product that is manipulating its purchasers, it is lulling them into a false sense of security. It's now a major cyber risk, and I think we all need to be conscious of that. I think my colleagues have noted in passing the issue of trust, and I really wanted to put that into some context for this audience. Consumer NZ does quarterly consumer sentiment tracking. We track the trust of multiple industries, and I'll finish with this point. The insurance industry is trusted less than banks, less than energy companies. Butter is $11 for 500 grams, and the insurance sector is trusted less than the supermarket sector. It's products like life insurance that are driving that lack of trust, and I think we could all reflect on what a better world we would live in without life insurance manipulating consumers. Thank you.
Kia ora, afternoon, Chair, FSC members and guests. The Affirmative team is indeed a fascinating mix. Two New Zealanders who have never worked in life insurance, and Matt Noyce, an Australian actuary who can't properly pronounce data and thinks Kiwi saver is a type of native bird. And they have tried to convince you with their rhetoric and their logic and charm, but the negative team is here to remind you that even the most charming arguments can be totally wrong. So, I want to begin with the leader of the Affirmative team. Now, I acknowledge I am guilty on a few occasions of fangirling Jane Wrightson. This afternoon is not one of those occasions. This is about to get totes orcs. The Affirmative team postured that the life insurance industry and financial advisors are not trusted. In 2024, Fidelity Life released its own research called Advice for Good around perceptions of the financial advice industry. And we convened a round table of the good and the great across New Zealand. And we were delighted that Consumer NZ took up a seat at that table and in fact had their investigative team lead, Rebecca Stiles, prepare a fantastic piece of journalism straight after the event, which included that 81% of New Zealanders who consulted a financial advisor said it gave them peace of mind, that 70% said it helped them make better decisions, and 67% said they believed working with a financial advisor prevented them from making financial mistakes. I go on because Tom Hartman, who is the personal finance lead at Sorted New Zealand, part of the Retirement Commission, also contributed to Rebecca's fantastic article. And he said, quote, he would love to see people seeking advice before making big financial choices in life, and advisors can make informed projections, and that is really empowering. Ladies and gentlemen, Consumer NZ and the Retirement Commission both highlight the need for culturally appropriate, inclusive financial advice, not a lack of trust. And then we had the second speaker, Matt Noyce, or Noyce, as I know him. Noyce is a formidable intellect, and he is not your archetypal consulting actuary. I happen to know when Noyce's not advising the largest life insurers' actuarial teams, he is kitted out in the poshest lycra, working out at Sydney's most expensive executive gym, consuming protein shakes and eating artisanal greens. So if any life insurance customer is complaining about the cost of protection, it is all bought and paid for right there in Noyce's biceps. The Affirmative team also went on to lament the lack of innovation and the lack of modernisation in New Zealand life insurance products. Firstly, life insurance is not meant to be trendy. It is designed to be timeless. And in fact, life insurance in New Zealand is undergoing a quiet revolution, from accelerated underwriting to digital onboarding to dynamic pricing and modular product design. This is not a legacy industry clinging on to its past. It is one that is actively reshaping its future. And today's debate should not be about product or price or commission. What we need is collaboration with policymakers and regulators to ensure that more New Zealanders than ever can participate in this quiet evolution. The Affirmative team also inferred that life insurance is something akin to a gamble, a lottery. Death insurance. It is true that in our culture, we tend to avoid talking about challenging topics like trauma and illness and death. But that sets us up to be unprepared for these events. And they have a high probability of happening to us or to someone we love. Life insurance is a win-win. If you take out life insurance and never claim, that is a life well lived. And if you need to claim, that is an investment well made. In closing, I want to leave you with this. Life insurance is a community good. The obvious beneficiaries of the dependents and the spouse, but it extends further to wider whānau, to communities, to businesses. Community goods are most beneficial when there is widespread, broad participation, and that's what we need, more participation. So we, the Negative team, welcome the FMA's review into the access and availability of advice. We would also heartily congratulate the leader of the Affirmative team on her recently signed MOU with Financial Advice New Zealand, linking the 1.4 million users of Sorted to the Find an Advisor portal. We welcome the FSC lobby of workplace life insurance relief. Life insurance is an essential safeguard protecting families, communities and New Zealand.
So, ladies and gentlemen, as we bring this debate to a close, let's step back again and look at the bigger picture. Life insurance is not just a product. It's a safeguard for families, it's a buffer against the unexpected, and it's one of the few tools that truly delivers peace of mind when life throws its hardest challenges at us. We've heard arguments today that it's simply an expensive burden, but here's the truth. The burden lies not in being prepared, but in being unprepared. Even my esteemed colleague on the opposition, she's got a lot of little press clips, this one, I tell you. She's been known to say, achieving financial resilience requires more than just New Zealand super. New Zealanders must be supported in saving, investing, and protecting what's important. Protecting what's important? That is exactly what life insurance does. Let's not reduce it to just another bill. Life insurance is a quiet promise that when the worst happens, families can still pay mortgages, still fund education, still move forward with dignity. It's a key stabilising force for households and for macroeconomic resilience. It is not a burden. It is in every sense an essential safeguard for the future. And don't let them tell you otherwise.
Dear God. What did I say at the outset? That the other team would play to your biases, your groupthink, to the industry's unwillingness to tackle some inconvenient truths, that they would defend a product invented in 1583. It was a great year, I was there, but times have moved on. It's being fit for modern times and modern consumers. Don't attack gingers, it's bad for us. And I'm devastated and disappointed to say that this is what you heard. You heard them saw the violin about how this dinosaur product protects families. A product that is hardly ever drawn down and where self-insuring for most is the obvious path to take. A product where only half the cost of the premium is actually paid out and the rest is industry padding and perks. You heard them talk about the knowledge and care that advisors take to tailor bespoke products. A community good? Get out of here. These are the same advisors that earn over 200% in premiums, that get junkets and conferences and that have a clear conflict of interest in selling a product in which they have an interest. You heard them say that an essential safeguard for the future is paying regular premiums that increase every year. I don't think they said that, did they? No. And where you're highly unlikely to get a payout, no, they didn't say that much either. And in the middle of a cost of living crisis. There are much more important insurances that are genuinely an essential safeguard. Health, house, travel, not this creaky old product that delivers so little to so many. You know, Simon started off with the trope of the family and then just did a boring recitation of definitions. I'm sorry, Simon, but this is not school level debating here. We are grown-ups. David, tēnā koe, David. Excellent dad jokes. Correct about the Māori data, but skillfully avoided the fact that the most Māori are not in life insurance because it's a dumb idea and they're smarter than that. And Bronwyn, insults, disparagement, posturing, wheedling, but no substantial argument for the product. She talked about advice. Everybody thinks advice is good, and thank you for the mihi about the MOU with Financial Advice New Zealand. I'm very proud of that. Nobody, however, is talking about the product here, and the product is the one that is the subject of this debate. So you've heard an industry-focused argument for the status quo that failed to acknowledge that deep consumer mistrust about a product that serves no real purpose in the 21st century. Customers are asked to pay thousands in premiums, often for decades, with no guarantee of value, and in return they get a PDF, a promise, and a customer service chatbot that doesn't understand the word claim when you type it in. We've not heard stories of innovation, of consumer focus, of modern product development, of the need to tackle AI and advice paths in a modern way. So I'm actually very sad to report that my team is now more convinced than ever that life insurance, as we see it today, is just an expensive burden that enriches intermediaries more than policyholders. Life insurance can't be an essential safeguard for the future because it's sold and serviced badly, and for most is completely unnecessary. You would be better buying a lotto ticket. So Thank you for your attention and for taking the brave step of acknowledging that things need to change and now, to get out of this middle class wastage product and into a new way of thinking that will design customer focused benefits and products, which is not what we have here. Life insurance is a burden. I'm terribly sorry.
Well, folks, there you have it. The arguments have been laid on the table. I believe we might have a slide with a Slido QR code so that you can vote. But if not, I've got a backup plan. Have we got somebody who can flick the slide to the next slide? Oh, look at that. There we go. It is. So please pop onto Slido. Weigh those arguments very carefully. Decide where you think the value lay.
Oh, you're very allowed to vote too,
Better watch how these people vote, hadn't we? Please pass through your votes.
I can't get it on the scene.
Wow.
Oh, I haven't voted yet.
That's only 5 votes so far, by the way, folks, so don't panic. Oh, we're still going.
Come on.
Time's up.
I think we're very close to the end, folks. Thank you very much for your participation. While we have a very humorous discussion here, and it is a very serious topic, and it's great to have these issues really laid out on the table. One question I would have for you, who really liked the format of having a debate in the FSC conference? Yeah. Great. So cool. When you get the feedback requests after conference, please pop that in because we've got support. We might be able to do one again next year and pick another topic and bring some more serious debaters to the table. But once the final word, I think I would just say it's I have to declare a winner. Right, it has settled. As we can see, it is very finely balanced, but the winner is the Affirmative team. Congratulations. Clearly, the answer in the room is we all have to rethink our life choices. So thank you very much, everyone, for coming along. Can I please have a huge round of applause to both the Affirmative and the Negative team, Bronwyn, David, Simon, Jane, Matt and John.